What is tax planning in the most simple words? Hi everyone, my name is Nicole and we're back here with another video. I'm a tax advisor with Robert Hall & Associates, and we are here to talk about what is tax planning in the most simple words. We're going to discuss why do you need to do tax planning, how tax planning can help, and what are the benefits. So before we get into it, let's hit that like and subscribe button. You don't want to miss out on any of our upcoming videos. All right, let's get into it. Well, tax planning is literally what it means. It is to plan your income for your taxes. You can affect your taxes in a multitude of different ways, and so you should take some time and plan. Now, there's really two different camps when we're talking about this. We're talking about businesses and we are talking about W-2 employees. So let's first start with W-2 employees. Is tax planning important for a W-2 employee? Absolutely. Tax planning is very important. We want to make sure that we're avoiding penalties and we're reducing our taxes as much as possible to support our goals. Tax planning is not just about reducing taxes. It's also about supporting your goals. We'll get more into that when we talk about the businesses. But if you're a W-2 employee, you can affect your tax. There's different ways you can do this. You can do this with HSA contributions. You can do this with retirement contributions. You can do this with credits. And knowing how much of those contributions you need to make or what credits you qualify will greatly affect your tax. You can have control over your tax in the current year. So it's very important for you to take some time to make sure that you are understanding what your tax liability will be. Now let's talk about penalties. Everybody's going to get penalties if you do not pay 90% of your current tax liability or 110% of your previous tax liability. You'll get what's called an underpayment penalty. Underpayment penalties can be easily avoided by doing one of those two things: 90% of your current liability or 110% of your previous liability. You need to remember that it's the larger one of those that they want you to pay. Now, you can easily estimate what your tax liability is by looking at your W-2 income and seeing about any other types of money that you have pulled to make sure that we are paying correctly. Another thing that we don't want to get really large refunds. I know some people get very excited when they're going to say, hey, I'm getting $100 back or $1,000 back. Okay, $100 or $1,000 of a refund, that's totally fine. Getting $5,000, that's too much. When you're getting large refunds, that means you're not managing your money really well because you're literally giving it to the government and begging them to give it back to you. And then they give it back to you with no interest. You might as well go take that money, put it into a high yield savings account, and you could at least be making money on that. And so you want to make sure we can balance that. So we're not getting large refunds and we're not having a large amounts that we owe. We want to balance it. Taking some time to do some tax planning before the year is over can help us balance that. Now let's talk about the second group of people. The second group of people are people that have businesses, LLCs, partnerships, sole proprietors, S corps, C corps, all of those types of things. Yes, you have a little bit more of tax control or more control over your taxes than somebody that is straight W-2. Because yes, you can make the retirement contributions, whether it's 401k, IRA, Roth, whatever it may be. And, you can also do HSA, all of those things that people with W-2s can do. But you also can talk about your expenses because you can reduce your taxable income with deductions. And so if you're coming up to the end of the year and you're thinking, I was going to buy a new car for my business, but I'm not sure, should I do that now or should I wait until next year? Tax planning is a great way for you to understand when's the optimal time to do that. That's when you'll be able to see, like, hey, I'm going to get a larger deduction this year or a lesser deduction next year. You'll understand, like, this year I had more income because it was an abnormal year, so I need that deduction. Or do I want to move some expenses forward and pay things in advance because I know next year I'm going to have a little bit less income? There's all different types of ways that you can address this. And it's really, really, really important for people that run businesses and are in control of their business that they understand what their tax liability is. Also, did we pay enough in quarterlies? Do you need to run a payroll? Are you an S Corp? If you're an S Corp and your business shows profit, you need to run a payroll. And so taking a few hours before the end of the year to sit down and understand what your taxable income is and what your tax liability will save you from penalties. It'll help put you in control so that you can maximize your deductions and also you can maximize your credits. And then that way you can reduce your tax liability to support your goals. All right, that is what tax planning is in the most simple words that I can give you. If you have more questions, please go to our website, roberthalltaxes.com, and you can schedule an appointment with me or one of my wonderful colleagues, totally free. We're here to help. Thanks so much. See you guys later. Bye-bye.